So tell me about Gamuda's kind of AUM and size and scale.
So Gamuda typically would measure this as GDV in terms of, because the development business is set up to buy assets or land, develop, and then trade it. And that's everything we do is predicated that way. There is some operational stuff in the placemaking piece, but generally, the high value assets are sold either individually to homeowners, for example, or as a income producing asset to core income. And we've done 18 billion pounds GDV. Wow. Through the property business. We have a 1.5 billion pound pipeline in the UK. And so our group revenues annually at the moment are about 3 billion pounds.
Wow, some size and some scale.
Yeah.
And so in terms of the UK then, talk to me about how Gamuda came over to the UK, what the business plan was and what the idea was as well.
Yeah, so this is during my interview stage, they were quite stringent about this is our investment focus, and it was almost like a rule book called the QTP strategy, quick turnaround project strategy, and it was meant to underpin decisions in Australia and UK, and to an extent Singapore as well. Now this was based on ticket size, so like 10 to 30 million equity, 5-year investment turnarounds, 20% IRRs net of tax and promote, and then JV partnerships, minimum 10% equity from the partner. And we started off focused on that strategy. We bought a site in Aldgate, bought a site in West Hampstead, both roughly like 70 to 80 million pound GDV sites. And then the rule book suddenly flew out the window. And
is that your doing?
No. I was asked my thoughts, but I joined about a month after we first started really getting our teeth stuck into the feasibility and underwriting of London Wall.
So we'll come on to that in a minute, because that is an absolute monster.
Yeah.
So it was initially, you're a developer by DNA in terms of the business. But in terms of accessing new markets, you came in almost as an LP, and you looked to partner with local developers who would need to have meaningful stakes, aka 10% of the equity at least co-invested.
Yeah.
You'd be the equity ticket, and then you'd obviously raise financing as well for the scheme. So to kind of test the market, you would take an LP position.
That's right. I think you've hit the nail on the head there. It's an active LP position.
Not a passive.
No, I think when people sort of started to align themselves to us or pitch ideas to us, they were picturing this kind of monthly report, or just use the bank monitor's report and give it to the co-investor. And we wanted to be in the design meetings about external wall system thicknesses and how much insulation goes in there, meet the building control guy, and the level of detail that we like to get in it's beyond what a typical LP would do. And that's because at the end of the day, we're a developer. We're a developer.
And so that's a way of being able to access the UK market meaningfully, but partner up with local talent that knows their way around, the UK site schemes, and can kind of be an expert guide, but almost give Gamuda the kind of the training and the understanding and kind of the lessons learned on how things operate.
I think that's very fair. We did use it as an educational springboard to progressing what we were doing over here, to growing a team, and to not have to do the minutiae. And you do need presence. If you're going through a planning application, you need presence on the ground, and you do need the local know-how of people that know what they're doing. And we partnered on the basis that, I think this has always been a thing for me, is partnering with someone when you're foreign capital coming in is sometimes asset led and very rarely driven by, oh, we just really like those guys, let's wait till they find something good. It's
Really?
always, I think it's different from maybe we look at it with a developer's lens on a site-by-site basis, whereas I think if you're a more silent investor, you look at a business and you think, I love what they do, and you piggyback the business, whereas we were always driven by
The site and the quality of the scheme.
the site first, then do we like the partner, and then is this, should we be investing equity into it?